Welcome to Investor Talk Show, where we dive into stories, strategies, and secrets of South Africa's most inspiring property investors and entrepreneurs. I'm your host, Neil Peterson, and today's guest is someone who needs little introduction. He became a self-made millionaire at the age of 22. He bought his first property at just age 19 and has gone into inspire thousands across the country with his message of financial freedom and smart investing. So he's an entrepreneur, he's a speaker, he's the author of the best-selling book, How to Become a Millionaire at 22, and most importantly, he's a passionate property investor. Albert van Wyk, welcome to the show. Great to have you here.
Hi, Neil. It's nice to be on the show, and it's nice to speak to you today. I hope we can inspire your viewers and your listeners to make their dreams come true through property investment as well.
That's wonderful. I look forward to that. So, Albert, take us a little bit back to the beginning. You know, what inspired you to buy your first property at 19 years old, and how did you make that happen?
Well, I wasn't born in a wealthy family. I was raised in a poor family. My parents were not property investors. They were not millionaires. They were not entrepreneurs. They were not business owners. To put it in perspective, I didn't get new school shoes. I had second-hand school shoes. Where we stayed, there was no grass. Only the wealthy people had grass, and if you were really wealthy, you had a swimming pool, right? So that was where I was born into, and that is where I come from. And I think what inspired me to go into property is from age 10, I was dabbling in entrepreneurship, and I tried all different types of businesses, and I tried all different types of entrepreneurial endeavors, which made me a bit of money. But then I realized that the best way to, invest this money or keep it safe or make it grow over a longer term is to invest it in something that's standing there, something you can touch, something you can see, because business is up and down. It's always going up and down. And I like a bunch of people in my generation read the book Rich Dad Poor Dad from Robert Kiyosaki, and he was like, you need to buy assets. That's the way to go. You need to buy assets. And my father left the house early in the morning when it was still dark to go to his job, and then he would come back late at night when it was already dark, to come home from his job, just to put some food on the table for us. And then we barely got through the month. So I knew there was something different we needed to do. I knew there was something different I needed to do for not only my life, but for the next generations to come. And I looked at property, and I saw this thing of an asset being able not to just provide wealth for you, but this is something that can go over to the next generations. And that is as much as I understood of property at that age. And I decided this is what I need to do. I need to buy a property. I need to get my hands on a property. And obviously, as a high school entrepreneur, you need some money to buy a property. So that's why I started other businesses to get the money so that I can buy my first property.
So maybe just take us a little bit more through how you actually made it happen, because you became a millionaire at 22. I mean, so maybe just share a little bit more about the process that you went through.
So when I was in high school, I started a little construction business. I was in a technical high school, Harty is John Forster. So there I learned how to, pack bricks, how to throw concrete slabs, how to do those type of things. And then I saw, oh, this can be a great business. So I started doing that in my neighborhood for the people in my neighborhood. And you can make a bunch of money from construction projects. I mean, you can build a carport for 20,000 Rand or 30,000 Rand, and then you can paint a wall for 10 or 15, paint a house. So right through high school, I made a lot of money through my construction, but that got me halfway there. So just before I wanted to buy my property, I had about 480,000 Rand in my savings account that I could now use to buy a property. And then I wanted to buy a flat. So I went and I was looking at flats in my area because that was my price class. That's the cash that I had. Then this one real estate agent showing me one of these flats said, you know what? If you just do like 300,000 Rand more, you can actually house a full title property just down the street. I have one to look at. And I went and looked at the house, and it's like 300,000 Rand more. And I was like, how do I get this 300,000? So she told me you can get money. The bank will just give you money if you can structure it right and everything. And obviously, because I got money from my little construction, I was able to do the application. The bank then, because I was only 19 years old, requested that I get a surety that signs with me on the contract. If I can't pay, that someone would then pay. So there was this one guy that's working with my dad, one of his managers, that said, "Oh, he likes the fire of this young guy. He'll sign surety." And then I never had to use the surety. My property cash flowed from day one. I was able to pay the bond from this property with my income that I generated out of the rental of this property, and then obviously my construction business. So I was able to pay the other half of that property's value off in 4 years. So at the age of 22, I had a 1.3 million Rand property that was fully paid off that I could then, you know, leverage to buy more property. So that is
Interesting.
in short
Oh,
how I did
great.
it.
Wonderful.
Um,
Yes.
and how I got
Well,
the first
that's a
property.
great story because you're very productive. I mean, in terms of building a business first, and I think that's also fundamentally what should also come there, that you decided to take action and actually build your business and create the income. So kudos to you. So what did all of that teach you? What did that teach you?
It taught me a lot. First of all, I think what it taught me is that you can start a business from 0 Rand, because I started my construction business from 0 Rand. My first project was painting a wall, and I told the guy I need a deposit. I used the deposits money to buy my paint and my paint brushes and everything. And then I painted the wall, and then I got the rest of my money. So I literally started from 0 Rand. I didn't have to put up any capital. And this whole process taught me that you can start from 0 Rand, build a business, take that capital, put it into an asset. That asset increases over time or gives you the ability to generate even more income through rental, through capital appreciation, etc. And you can become a millionaire from 0 Rand. You can buy an asset, you can have a property. And there's so many people out there that's like, you need money to make money. Uh, you cannot ever own a property because you don't have income. They have all this negative talk that this is not possible. But what this whole process has learned me is that it is possible. You can literally start from 0 Rand, and you can buy an asset, you can build a property portfolio. And today I have a much bigger property portfolio that's literally funding my dreams. And that can start from 0 Rand. I also learned a lot about renovation. I learned how to, do the whole process of transferring a property, bond application, managing tenants. It was a good experience, that first property, to learn all of these things so that I could use it for the rest of my portfolio.
Excellent. Great story. So you read your first business book at 10 years old. I mean, what early lessons about money or mindset stuck with you and helped you shape your journey now today?
Definitely financial education. The fact that financial education can change your life. As I said earlier, I didn't come from a family that understood business or property or finance or finances. And through reading business books, right, and then applying that at a young age, I gained experience and knowledge that my forefathers never had. And that literally changed the future for me. That literally changed my life. So I think a valuable lesson that I learned out of starting a business at age 10, reading my first business book at 10, is need knowledge. Don't just go and do something if you don't have the knowledge. And a lot of years and even property investors say, have property, and then they just want to go and buy a property. Don't have the knowledge. Business owners that start by they had a middle management position in a company. They quit their job. Now I'm just going to start a business. You need knowledge. And then when you have to apply it, and through experience, you become someone and actually run a property investment portfolio, someone that can actually run a business. And that is very important. So financial education was a big lesson for me in that early
Awesome.
stages.
Great. So you shared now how you actually overcame the challenge of funding with your first few deals. So what strategies did you use thereafter to start growing your portfolio? Because now you've moved on and you built a much bigger portfolio. So maybe if you can just share just some of your creative strategies that work best for you.
Well, first off, I think the way that I do property investment is a little bit different than most people do it. So I do a multi-let. So I buy the property and I renovate it in such a way that I can rent it to multiple tenants, and that makes sure that I have positive cash flow from day one. So I'm getting a lot more rental income than a normal property investor would get from renting a flat to one tenant. I buy full title properties with big rooms or a lot of rooms. I have my own construction team that business is still running from high school, but now I have a different manager for that business and a team that comes in to do renovations at low cost, basically at cost. And I'm able to come in at a very low cost, do the renovations, and then rent out at a high rental income because I have multiple tenants per property. So that's one strategy that I use to generate positive cash flow from day one. And then with that positive cash flow in the bank, now you have some proof to refinance. So I refinanced my first property to buy the next one. And then I refinanced after I paid them back, I refinanced both of them to go on to buy the next one. So the process got faster and faster over the years. So the first one, like I said, took me about 4 years before I was able to put that equity back in the property. And then the next one took 2 years. And then I think this year I already bought 4 properties just from January to now. So it goes
Lovely.
quicker.
Yeah.
And it's just being able to have positive cash flow. That's your first
Yes.
thing. And
Yes.
then being able to use that positive cash flow to motivate for refinancing and using the equity in your property. So that's my
Wonderful.
strategy on how I was able to expand the portfolio.
Great stuff. No, good strategy. So just looking back, what was your biggest mistake or learning moment in property and how did it make you a better investor?
I think a lot of property investors would agree with me if I say tenant management. So, I do buy to lets. So I keep all my properties and then I rent them out to tenants. Tenant management was the biggest lesson that I learned. In 2019, I had a property where I had a family stay there. They they were professional squatters, so they got in very nice. All the paperwork is there, pay slips. We do the background checks, but everything was fine. They got in, paid 1 month, and then they stayed 9 months without paying. My contract was not sufficient. My processes was not good enough, and my method of handling the tenants was not good enough. And I think a lot of property investors out there complain. I hear it a lot when I say, "Hey, I do property investment." They're like, "Oh no, I can't. Those tenants, I can't." It's and I always tell them, you know what? It's the responsibility of the property investor. It's not the tenant's fault. It's your fault. If the tenant doesn't pay, it means you don't have good enough payment processes in place. If the tenant defaults, it means you did not do the background check well enough or your contract was not well enough. So I learned a lot about tenant management. It changed my whole portfolio. In the last 3 years, I didn't need to do one eviction because I structured my contract in the right way, and I started doing my tenant acquisition process in the right way to make that I do it correctly. And that's the responsibility of the investor to do that right. So I learned from that. I
Great.
improved my process,
Excellent.
and now it works.
Very good lesson. So you also speak a lot about structuring deals correctly. I mean, can you just share one simple but quite powerful structure tip that every investor should know?
You need to move ownership. away from you. It's one thing that I've learned when I hit 5 properties, the banks started saying I'm a high individual because I had properties in my own name, and then it dawned on me something different. Also, if you die at that stage of 5 properties, coming from a family like mine. Uh, if I leave those properties to my parents, they won't even be able to afford just the transfer fees to get that properties in their name. So there's a high level of risk there. So the structure tip that I have is you have to move ownership. There's a lot of different ways. Some people buy property through trust. People buy them through property. Some people companies. Some people buy them through companies being owned by trusts. There's a lot of different ways you can go about it. But I think the biggest tip is move ownership. As soon as you move ownership, then applying for bonds becomes easier. The risk factor goes down. Transferring those properties to the next generation becomes more efficient. Taxes becomes more efficient. So this whole new world that opens up for you as soon as you start moving ownership away from yourself. And there's obviously a lot of experts in the market, accountants and lawyers that can assist you to do that. But I would definitely suggest look into that. That's a tip that changed my life. Around about 2019, I started moving all of my properties into different entities.
Wonderful. Also, some some golden nuggets there. So you've built a team around your investments. I mean, what key people should every investor have on their side, and why?
Well, I am an entrepreneur at heart, and I have a lot of other businesses. So I've decided to run my property investment as a business. So by doing that, I created businesses around my property portfolio that support that property portfolio. So I created a company that's my own rental agency that just rents out my properties. I created a maintenance company that just looks at the maintenance of my properties. I created a construction company that just do building and renovation work on new properties. So if you're going to go into property investment and you know you're going to do it for the next 50, 100 years, Neil, maybe, I don't know, maybe you live to see 200 or 300 or, with all the new technology. If you're going to
Yeah.
do it for 300 years, then it's worthwhile to put the companies in place that serve you and your portfolio so that you don't have to pay a premium for those services or to other suppliers. So I would suggest you definitely have to have someone that manages tenants, managing agency for your tenants, and you can pay someone else or agent to do that, or you can have that in-house. You definitely have to have a maintenance team. Uh, Things go wrong at properties, and it's important to do that. You definitely have to have a good relationship with a lawyer and an accountant, someone that looks out for your best interests. And you definitely have to have a good bond originator. So that's very important if you want to scale fast. And the lawyer and the accountant is there for advice when you need it and to point you in the right direction. And then it's also good to have a good relationship with the agents in your area. So I have 3 agents in my area that I know very well. And most of the time, when they see it's a type of property that I would like to buy, they just WhatsApp me and say, "Oh, but this is your type of property." And I view the property before they even sign with the client. That property does not go on Property 24. I buy it before it goes on there. And I think that's important. If you have that relationship with the people in your community and in your area, you can get those deals that everyone is always talking about. But it's actually possible to do that if you just have a good team and good people around you. So I hope that
Awesome.
answers your
No,
question.
absolutely, definitely. I think you did answer it comprehensively. But what's your ultimate message to young South Africans watching this? I mean, who want to build wealth through property, but they don't know where to start.
Uh, they can follow my journey on how I started. They can start from 0 rand. They can start a business that can give them the capital to buy a property that they can leverage to buy more and eventually fund their dreams. And that is the recipe that they can follow. There's a lot of other recipes that they can also follow by reading, business books from millionaires and billionaires out there. And what I always tell the youngsters is there's so many successful property investors, billionaires, millionaires, successful entrepreneurs that wrote books that you can learn from, that shows their recipe. And we can all read, right? And
Absolutely.
they write these books for you so that they can help you, so that you can learn how to do it the right way. So for youngsters, I always say, you know, amp up your financial education. If you are between 16 and 20 years old, you need to read a book a month. That's like the baseline. You need to read one self-help book at least one a month, and then from there you can do two or three a month. But when I was that age, I read a book a month, and I still try to do that today. Um, but that's very important. You can learn these recipes from the people that has actually done it, and then apply it. And I think in South Africa, with our economy, with what we have here, where we come from, my story is a good example of how you can do it practically. Uh, Especially if you were born and raised in the Muet of Pretoria, where I come from, then you can just duplicate. These things are not new. The structuring we talked about, all of the other things we've talked about in this interview, none of it is new. None of it is mine, and none of it is something complicated. These things have existed for years, for hundreds of years. You just need to duplicate the model and find the recipe. So if I can summarize, find
Yes.
a good recipe, duplicate it.
Awesome. No, I think I like that. So Albert, tell us what's next for you in your property journey. And I mean, how do you see the future of property investing evolving in South Africa?
So currently I'm buying a lot of property in the Cape area. So over the last a couple of years, since 2012, I've only been buying in the Moot area where I stay. And now recently I've started diversifying, and I've started buying property in the Cape area. We are me and my brother, who runs the construction company, are busy moving into more development space. With my first 11 properties, I was just renovating. So I was just buying and renovating. But now we are moving to buying land, building, and developing things, which is an exciting space. So I'm moving into that. That's the future. And also expanding the property more to the Cape area. So that's my goals going forward. So I'm busy with that. And then I'm
Great.
also moving into we spoke about that earlier. I'm also moving into the property education space. I'm excited about that. This
Yes.
year I did a nice property workshop, which went really well and people enjoyed it. So I'm going into that space as well, and see how that goes for the next couple of years. So
Wonderful.
very excited.
Absolutely. I mean, Albert, just thank you very much for sharing your wisdom, your energy, and your experience with us today. I mean, your journey is proof that age is no barrier when it comes to building wealth through property. It's all about the mindset, the action, the strategy. If people want to reach out to you, where do they get hold of you, Albert? How do they reach out to you?
They could just look for Albert van Wyk anywhere on social media, and also they can just Google albertvanwyk.com and they can find everything there. And I think if I can leave one last message to your audience, is that the biggest lie that we've been told in this world is that it is not as easy. It's more complicated than we think it is. And that lie keeps a lot of people poor and in poverty, because people think property investment, that's more complicated than I think it is. There's going to be a lot of problems that I don't see. There's going to be a lot of things that I don't know. It's very complicated. And that's one of the biggest lies that keep people poor. It's not as complicated. It's much more straightforward than you think it is. And if you just follow the recipes, you just read the books, you just apply the knowledge, and you gain experience, you'll see it's much simpler than you could ever imagine. And it can enable you to live your dreams.
Wonderful, Albert. I think lovely message to end off with. I mean, to our viewers out there, if you're feeling inspired, now's the time to take that first step. Rewatch this episode. Take notes. Start building your own roadmap to financial freedom. Don't forget to like, subscribe, share this episode with someone who needs to hear it. Albert, thank you very much for chatting. Until next time, I'm Neil Peterson.
Awesome.
Stay bold, stay curious, and keep investing smart.